Greetings and welcome to the Principles of Accounting tutorial by StudySpace. In this video, we're going to be studying our last chapter for the course, which is going to be depreciation and treatment of non-current assets. So, what are non-current assets? Non-current assets are any resources that are used over a time period of more than 1 year. So all your equipment and all your machinery and trucks, etc. are classified as non-current assets. Meanwhile, any assets which are used within 1 year, such as accounts receivables and cash and cash equivalents, inventories, are all referred to as current assets. So now we're going to look at how to record non-current assets, and solely on the basis of how they incur. So first off, before we begin, we're going to look at the cost plus the expense principle. Under the cost plus the expense principle, what we do is we record all the costs plus all the expenses incurred to gain the asset as the total book cost of the asset. So for example, let's say we bought a truck which had cost us 5,000. Now this truck may have cost us 5,000 to purchase, but transportation of this truck cost us an additional 200, and then maintenance of the truck cost us 100. Lastly, petrol and expenses that took between other petty expenses that came between this were 50. So the total cost that would come in our balance sheet for this particular truck would be 5,350. I'm just going to write the headings down here. So the total cost that we would record in our balance sheet would be 5,350. The reason why we record this cost is because this is all the expenses that we incurred before we actually began to use the machinery. Therefore, this would be our primary cost. Now, building upon this cost, we will further move on to depreciation. Depreciation is basically the division of a machinery's useful life over a certain period of time. So say we have that same particular truck which had cost us 5,350, and we bought it in the year 2012. Now we predict that this truck will last us for 5 years, meaning that in 2017 we will sell this truck off, or we will dispose of it. Now selling this truck off or disposing of it, we predict that the scrap value metal of this truck in that year would be 2,350 to give us a round number for depreciation. This value will be called our salvage value. So after we subtract the salvage value from the initial cost, this will give us the total amount of depreciation that will be the difference between the two, and depreciation will be divided over the time period of 5 years, incurring every year, giving us a depreciation of 600 per year. So every year we would have an entry such that depreciation expense debit and accumulated depreciation credit. by 600 every year till we come to the point where we have to dispose of the asset. Now this is a very general and very basic entry for depreciation. This method that I just explained to you is called the single straight line method. On the basis of this method, a very straight approach is used in order to divide the depreciation over a number of time periods and then to apply it throughout every year. Now moving forward, we will look at another type of depreciation method, which will be our unit of activity method. Under the units of activity method, in this method, instead of using our years as an account of depreciation distribution, we use the units of activity as a measure to distribute depreciation over time period. So say that this 3000 depreciation is now the total depreciation. Under the units of activity method, we will take the total depreciation and we will divide it by the total number of units of activity that this will perform. So say this truck can deliver 300,000 units. So if we go by that principle and use 300,000 units, that would give us the answer as 0.01. So 0.01 would be the depreciation per unit, and we would then multiply it to the number of units that had been used in a year. So say 0.01 multiplied by the number of units transported in that year was 100,000. That would give us the depreciation of that year as 1,000. Now this method is a little more fair, as this accounts depreciation over the amount of work done. Over the exact amount of work that has been done, instead of accounting depreciation for a measure that is more unrealistic than the one we are using currently. The third method is the reducing balance method. Under the reducing balance method, the company sets aside a certain percentage that it applies every year to the value of the asset, reducing it to a certain balance. So under the reducing balance method, this percentage has been prematurely decided by the company. Say in this case the percentage is 40. So we would multiply the total cost by 40% to calculate the amount of depreciation for that year, which would be 2,140. We would then subtract this depreciation to give us the net book value of the asset, which would then be carried forward for the next year. Now we would multiply 40% with this net book value to continue getting depreciation every year till we come down to our salvage value. So this 3210 would be our net book value, and now moving forward we would multiply this by 40 to get the depreciation for that year, and so on and so forth till we reach the net book value. The exclaimer here is that the number I used for a reducing balance method is a self-generated example, and it may not be accurate, as all the examples were just to explain to you how the method should work and to actually appropriately explain to you how these three methods will be used. These numbers may not add up, but at all times your result from the straight line, the units of activity, and the reducing balance method will be the same. Your depreciation per year may vary, but your total depreciation will always be the same. These methods are just a way of distributing that depreciation over a certain period of time. In units of activity, you will be given the units. In reducing balance method, you will be given the balance, and you will be given the percentage. And in straight line method, you will be given years to allocate the depreciation. So that's it for this video. In our next video, we're going to be looking at how assets are disposed of and how to treat other non-current assets such as natural resources and intangible assets. I hope this video was helpful to you. Thank you.